Hi friends, in this video I want to speak about 5 high risk and high return stocks, and the intention of me talking about these 5 stocks is not to give you stock recommendations but to introduce you to these 5 stocks because these are high risk, high return stocks. With that, let's move to stock number 1, which is Garden Reach Shipbuilders and Engineers Limited. Have a look at my screen and you will see that this stock in the last 1 year has given close to 122% return, making a high of 2710 rupees. Right now at the time of recording this video, the stock is trading at 1811. That is a correction of around 33% from its high levels. Now, why this sharp correction of 33%? There are 3 reasons that I could find. Reason number 1 is that Elara Capital, what they are saying is that one of the large orders that the company was expecting in FY24 has been deferred to FY26. That's why they are saying that there is a sell rating. ICICI Securities also have a sell rating on this stock because they are believing that there is a lot of pressure in terms of the margins of this particular stock. And also Bangladesh crisis might impact their revenues, etc. I'll speak about that in a minute, right? And thirdly, Wealth Mill Securities, what they are saying is that there is a correction in terms of the overall defense stocks and there is a profit booking going on. That is the reason that the stock is down. So in my view, the stock is at a very interesting juncture because there is a risk of sentimental correction in this particular stock, because people who have invested in this stock in the last 1 to 2 years might be sitting at a huge profit and they might be doing some profit booking because of the sentimental fears of overvaluation in the defense stocks. And that's why I call this stock as a high risk stock, because there may be further correction in this particular stock. But now let me talk about the high returns aspect of this particular stock. So point number 1 you will note is that the promoters in this company, which is the government of India, is holding 74% stock. And people who have watched my previous video around William O'Neill's 7 parameters of picking high growth stocks, he talked about the limited supply of the stock quantities. And if the promoter holding is more than 74%, what does that mean? Simply, that means that the supply of the quantity of the stock is going to be limited in the market, right? More importantly, if you see, FIs have done some buying. It has gone up from 3.26% to 3.9%, while the DIs have done the profit booking in the quarter of June. The stake have come down from 6% to almost 3.20%. Now, 2 quick points here. One is that the majority of DI selling, in my view, has happened in this particular stock. And secondly, if you do the total of the institutional buying here, it is around only 7%. So again, going back to the previous video, William said that if the financial institutions have got low stakes in the company, it means that there is a chances of they coming back and buying more stocks and giving the stock a rally, right? This is the theory that William suggested. So in my view, from a shareholding perspective, it looks very, very positive to me. Now, if you look at the valuations of this company, you will very quickly note that the PE ratio has come down because of this 33% correction. It has come down to around 58 versus 78 PE of industry, and the PB ratio is 12.81 versus industry PB of 11.85. These numbers are now looking very, very manageable as compared to where they were in terms of high P's of 80 or 90s. But the question you may have is, Rahul, are these valuations still justified or not? For that, if you look at the fundamentals of the company, if you look, the revenues are all-time high. If you look at the profits, all-time high. Last 3 years growth, if you see, sales growth is 47%, profit growth is 29%. If you look at the ROE, it's gone up from 18% to 22%. But Rahul, this is the past, right? Now, can you speak about the future visibility of the revenues of this company? So let me give you the order book of this company. It is standing at 25,000 crores. So a company that has yearly revenue run rate of around 4,000 crore, not even 4,000 crore, is sitting at 25,000 crores of order book, which is almost 6 times. And also the management of the company is guiding for a 25% to 30% of revenue growth in the next few years, which is excellent growth in my view. In addition to the strong order book, the company is also bidding for a RFP that is going to be an order size of huge 36,000 crores, which will get split into 2 shipyards. It might be Mazgaon, it might be Cochin shipyard. I don't know the second stock, but they are also likely to get some pie of this particular huge order if they are able to win this. Lastly, on my screen, you can also see the breakdown of this order book. So this is not something that they have built in the air. They have actually given the details of this order book. And more importantly, I want you to focus about the Bangladesh orders, which is not even more than 1.2% in terms of their overall order book. So there is not a significant risk coming from Bangladesh perspective. So Rahul, in terms of the risk, what is the risk here? So in terms of the risk, the only risk I see is that the stock has corrected by 35%. There may be some more pressure on this particular stock, but right now I think the majority of the selling in this particular stock is done, and the order book next 2 to 3 years of time horizon looks very, very positive to me. Not a stock recommendation for you, but I have given you a lot of details about this particular stock. Please go and do some more research about this stock. Before I move to stock number 2, let me reiterate that investing in stocks is highly risky. We should never invest 100% of our money in stocks. Rather, we should balance the high risk of stocks by having fixed return instrument like FDs in our portfolio. And the reason I say FDs is because if you go to stable money platform, you will see FDs that are giving interest as high as 9.1%. Not only this, nowadays you can use FDs to park your cash if you're waiting for market correction. This is because on stable money platform, you can withdraw your FD anytime and your money will come back to your account instantly. So in case the market corrects and if you want to buy the dip, you can go ahead and withdraw your money from FDs and the money will come instantly into your account. You can take that money and invest in the markets immediately. Gone were the days when you had to open a bank account to open a FD in a particular bank. With stable money, you can open FDs with multiple banks without having to open a savings account with a particular bank. Already more than 5 lakh people have trusted stable money platform for their fixed return investments. And just for avoidance of any doubt, when you book a FD with stable money will directly send your money to the bank. Your money is not kept by stable money. Stable money is a platform that is connecting multiple users with multiple banks. You can check out the stable money app. You will find the link in the description or in the pinned comments. Let's move to stock number 2, which is Motilal Oswal Financial Services Limited. The stock in the last 1 year has given crazy returns of 231%. And let me walk you through what are the risks and what are the return possibilities with this particular company. If you analyze the P&L statement of this company, you will notice that from 2013 onwards, the company has been consistently growing, except these 2 years here, 19 and 20, where the revenues fell slightly. But other than that, the top line of the company has been growing consistently. And if I show you some numbers, in the last 10 years, the revenues of the company have grown by 31% CAGR, while the PAT has grown by around 42% CAGR level. More importantly, if you see just the last year, the revenues have almost doubled while the profits have almost tripled. And if you look at the trailing 12 months, 60% of sales growth has been shown by the company. And if you look at the trailing 12-month profit growth, it has been around 96%. Now, in spite of this huge growth and the rally in the stock prices, if you look at the PE of the company, it is still at 16.07. The PB is at 5.13 versus industry PB of 3.04. So it's not that the stock is trading at around crazy 50-60 PE levels. The stock is in check in terms of the PE and PB ratios. And if I quickly speak about the business model of the company is into 3 main segments. One is that they are selling their own products, for example, mutual funds, their portfolio management services, alternative investment, etc. They also distribute third-party products such as insurance, bonds, FDs, etc. But more importantly, they are into advisory, which is the wealth management, and this is where the majority of their growth is coming. And to back my statement with some data, you will very quickly note that their wealth management services, which is the largest contributor in terms of the revenue, have grown by around 69% year on year if you look at the last 5 quarters. And this is why precisely the company has recently announced that they are transitioning from being a broker company to a wealth management company. And if you read the statement by their group managing director, what he's trying to say is that nowadays there is not money left in the transactional services like broking business. People want personalized investment services. That is where they're moving towards. If I show you the shareholding pattern of this company, very quickly you will note that in spite of the huge rally in the stock in the last 1 year, the promoters are still holding their stakes, which is a very good news. More often than not, you will see the promoters are selling their stakes nowadays because of the massive profit booking that is going on. But here in this case, the promoter stakes are very constant, which is a very good news. If you look at the FIs and DIs, very stable stakes is what we can see here. Now, a couple of high risks with the stock. Number one is the FNO taxes and also SEBI's attention to the FNO space. If I talk about the taxes itself, the management is saying is that the overall impact due to taxes is around 10 crores a quarter, which is not very huge in my view. And the second risk that I see with this stock, if you look at my screen, is that the stock has been very volatile. And if you look at the last 6 months, the stock has fallen by close to, let's say, 32% here in the month of March, again 22% here in the month of April, between April and June, 27% here very recently. So the stock has been extremely volatile. It is not for weak-hearted investors. There may be a lot of volatility in this stock, and if you can't withstand that, then the stock is not for you. But this is a high growth and a high risk stock. So far, if you're liking this video, request you to hit the like button. Let me know in the comments a simple thank you. It will motivate me to come up with such content for you at zero cost. Also, you can consider subscribing to my YouTube member community because I post in-depth analysis of stocks, mutual funds and various other assets, and I bring almost daily updates from stock market, giving you a lot of insights. Simply go to my channel and press the join button. With that, let's move to stock number 3. The stock name is Info Edge India Limited, a stock that I spoke about on my channel almost 4 months back, 12th April 2024 to be precise, and stock at that time was in massive rally, and from that time onwards the stock has gone up by almost 30%. So a 30% appreciation in the last 4 to 5 months. Stock has been in a massive bull run. I would highly recommend you to go and watch the full video. You are going to learn a lot about this company, but let me now bring you latest update about this stock in this particular video. So if we look at the Q1 results, you will very quickly note that the revenues is up by around 9.3%, but more importantly their operating profit margins have been maintained at around 35.6%. Extremely important point that I covered in my previous video. I explained what is operating profit margin and so many other things around it. Please go and watch that. But good news is that they have maintained this operating profit margin, and if you look at the cash from operations, because this is a cash rich company, the growth has been around 20%, and that is why the stock is still rallying. Now if I break down key insights from their each business stream, for example recruitment, which is Naukri.com, I talked about how 80% of their revenues are coming from Naukri.com, and out of that 80%, 50% of their revenues come from IT hiring. And guess what, right now IT is a buzzing sector. Infosys, TCS, and in fact overall IT index has been in a massive bull run in the last 4 to 6 weeks. IT hiring has been picking up in the last 4 to 6 weeks. In fact, I was reading an article in Economic Times just yesterday where Infosys has emailed the freshers where the joining date was paused from last 2 years, have given the joining date of 7th of October. So there is a lot happening in IT sector, and if the IT hiring is going to pick up in the next 4 to 6 months, this stock is going to do very good in terms of the top line as well as bottom line. Coming to their second business stream, 99acres.com, which is a loss making business, but more importantly, if you see the operating profits, the loss have narrowed down by around 41%, which is a very good news. If you look at the cash losses that you will see, it used to be around 72 crores. It has come down massively by 81%. So a good turnaround story is what I can see in 99acres.com overall. Very similar story in Jeevansathi.com. Their another business stream, you will see their operating losses have come down by almost 44%. Their cash from operations have also improved by around 56%. If you look at their education work stream, which is Shiksha, you will see that the revenues have grown by almost 18.4%. Cash is looking very good. Overall, all the business streams are doing really well right now. People who don't know, they have also heavily invested in stocks like Zomato, PB Fintech or Policy Bazaar. Both the stock have been in massive bull run. Also, the company is gaining from that as well. Now comes the valuation. If you look at the Info Edge India Limited's PE ratio, it is a massive 152 PE, very high PE. But let me also tell you, when I created the video 4 months ago, at that time the PE ratio of this company was almost at around 352 level. And if you look at the median PE, the PE chart in the last 3 years, the company trades at a median PE of 126, right? And right now the PE is at around 152. And if you look at the price to book ratio in the last 3 years, again, the price to book ratio has been around 3.5 median PB. Right now the stock is trading at below median PB, which is at around 3.2 level. So what is the risk with this particular stock, Rahul? So in my view, the stock is trading at an all-time high value of 7,500 level, and the chances of correction or the risk of correction remains very high. Although the stock is growing leaps and bounds, the chances of correction and the risk of correction is always there with such stocks. With that, let's move to stock number 4, which is Zen Technologies Limited. Have a look at my screen. You will see that in the last 1 year, stock has given a massive rally of 107%. I've spoken about this particular stock a lot of time on my YouTube member community. And if you want to get regular updates on various stocks, then you can consider subscribing to my YouTube member community. But now coming back to the shareholding pattern of this particular company, you will very quickly note that in the last 1 quarter, the promoter stake have come down. But if you look at the DI stakes and the FI stakes that have gone up, and this has happened because mainly this company issued a QIP, which is qualified institutional placement. And if I show you some data, the company issued this letter here, which is on August 24th. What you will note here is that the company did the QIB at an issue price of around 1600 rupees per share, and the companies like Kotak Mutual Fund, White Oak Offshore Fund, Motilal Oswal Mutual Fund have subscribed for this QIP. And that is why precisely the promoter stakes have come down and the DIs and FI stakes have gone up. But what really it tells me is that the price of this stock is now set at around 1600 rupees level because these mutual funds have bought it. It doesn't mean it cannot fall. It can definitely fall. But to me, there is a psychological mark here in terms of the price level of around 1600 rupees per share. Now, if I speak about the fundamentals of this company, very quickly you will note that the revenues of the company has almost doubled in the last 1 year and the profits have almost 2.5 times in the last 1 year. And if we talk about the future revenues and profitability, the order book of the company right now is at around 1158 crores, which is almost 3 times than their yearly revenue run rate that we are seeing right now. What does the company do? 2 key products. One is the training simulators for the armed forces and second is the anti-drone systems. And you can also see the breakdown between domestic and export. So there is a good balance here as well. Also, very recently the company launched AI powered robots and 4 new defense products for the global market. You can read this commentary here, and the moment this news came out in the market, the stock rallied like anything because there is a prospect of future revenue and profitability coming from these new products as well. If I speak about the valuation of this particular company, the PE ratio of this company right now is very high, 99, and PB ratio is extremely high, almost 3 times the industry PB. But see, there is a reason that mutual fund houses have bought this particular stock at this very high valuation because they are seeing the future earning possibilities in this company. And if you look at the PE ratio chart in the last 3 years, the median PE of this company has always been 94.55. This company trades at a very high PE level, and this is why I say these sort of stocks are high risk and high return stocks. Right now the PE is at around 99.47. If I talk about the PE ratio of this company, if you look at that very quickly, from a PB ratio perspective, the median in the last 3 years has been 8.5. Right now that is trading at around 31.6, highly overvalued from its median PB ratio, but that's what the investors are right now willing to pay price for because of the future earning possibilities. In terms of the risk with this stock, the stock has come down by almost 15%. If you look at the top highs that it made at around 1978 levels, could this stock fall below 1600 rupees level? That remains a risk with this particular company. As I said, these are the high risk, high return sort of stocks. Let's move to stock number 5, which is Shakti Pump Limited, and have a look at my screen. You will see the last 1 year stock have rallied by almost 400%. Massive rally in this particular stock, but in spite of this massive rally, if you look at the valuations of this company, PE ratio is still at 38.55 versus industry PE of 43.38. The leader in this particular segment is KSB, which is trading at a very high PE of 73, right? The PB ratio of this company is 11.91 versus 10.46 industry PB. Let me now walk you through what has caused this massive rally and what are the future prospects of this company with the high risk that I want to speak about. If you look at the P&L statement of this company, you will look at last trailing 12 month has been 121% growth. And if you look at the compounded profit growth rate in trailing 12 months, it has been around 1323%. You can see the massive profit growth rate here happening. The revenues are all-time high. Why this is happening? Because of the PM Kusum scheme. So what is the PM Kusum scheme? There are 3 components to this scheme, but more importantly, component B is what we need to focus on right now. So if you look at the farmers across India, you will see farmers using diesel driven pumps to do irrigation in their farms, right? Now what government said is that farmers, please get rid of these diesel driven pumps and install the solar driven pumps, and this is where this company comes. The company is producing solar pumps for irrigation purposes mainly. So this component B itself has given them an order book of around 2000 crores as of now, and what their management is saying is that these 2000 crores of order book they are going to execute in the next 15 months. So there is a huge tailwind right now coming from this component B of PM Kusum. But more importantly, the company is projecting around 30% of growth in the next few years. This PM Kusum scheme, please go ahead and read about it. There is a component C as well, where these pumps will directly get connected to the grid, which is powered by the solar energy, right? This is where the company is right now working on, and you can read this commentary here that they are excited about component C, which will get implemented hopefully in the next 2 to 3 quarters. They will start to see some good traction on this particular one, which is not included in this current order book. So in my view, there is a good positive future that I can see right now in this particular stock. But coming back back to the risk aspect of this particular stock, the stock has given a massive rally. It has gone up from like 1600 level to almost like 4300 level right now. The stock touched all-time high of 5000 levels. So there is going to be a danger of correction. It is not advisable to enter into these stocks at these price levels. But what I have done is I have given you gist of this particular stock in terms of why this is a high growth stock in the coming few years. And the key risk remains the valuations right now. But if I look at the shareholding pattern of this company, you will very quickly note that FIs have bought the stock at even this high price level, and DIs have done some profit booking in the last quarter, while the promoter stakes have been constant in the last 2 quarters. So far I have spoken about 5 high risk and high return stocks in this particular video. In fact, let me know in the comments any high risk and high return stocks in your watch list. I would love to know about that. Let me know in the comments. Also, please understand that investing in direct stocks is highly risky, so please make sure you have a balanced portfolio. And in my view, fixed deposits are a very good way to bring balance into your portfolio. So check out Stable Money platform for FDs that are giving as high as 9.1% returns. You will find the link in the description or in the pinned comments. I'll see you in my next video. Until then, keep rocking.